So guys, quick video right here. Welcome back to my channel. This is the YouTube channel. So I want to just make a quick rundown on two trades, right? Just two trades. I want to be fast on this video. This video would not exceed 10 minutes. So I want to show you guys how I flipped $100 to around 800, around 900. I think $138 to 900. So using two trades. So the first trade I did, I flipped like 300 to 900. And the second trade I did was I flipped sales today, right? That was today. I flipped $100 to, you can see, $100 to 900 or something. Let me see. It's to $942. So, and I'll show you, you can say I took profits, two entries. I will analyze the two entries too, and I'll tell you where I got them from. Let's start with the first one. First one was yesterday, so 2 days ago now, because the time is literally 12:23. So I basically said I want to where is it? Yeah, I want to start looking for you. I want to start looking for good buys. Right? I want to start looking for good buys. Yeah. Yeah, see the chart right here. This is the daily time frame. So let's go to the daily time frame and I'll explain to you guys why I'm bullish. I was bullish on gold. Right. Let me just do this. So just zoom in a little bit. Let me delete all of this. Delete. All right. So basically, yeah. When you come to this chart, right, you see all of this. Right. You see all of this. So what I saw was basically this pattern, right? I think I explained this already on the live stream, but let me just try and explain it, right? You have a point of interest, right? This point of interest, this demand zone, right? So you have this demand zone right there, and you have this demand zone right there. Now, market needs liquidity to move, right? So on this demand zone, right? There was liquidity. That is liquidity. This is the liquidity, right? This is liquidity, right? Present, and the market started making higher highs and higher lows, right? And then the market started breaking down. Now, this pattern is very simple. It's very, very simple. The daily is higher time frame pattern. Now you can see it clearly. This is your demand zone, higher time frame demand zone. Have your liquidity zone. All you need to do is just mark it out. All you need to do is mark it out, right? You mark out your liquidity zone. So this is liquidity we're using, this is demand we're using. If this liquidity was not present, I'll be more skeptical, right, about this zone because the market could literally do this. The market could literally do this, right? But because of the liquidity present there, I was confident about the buys, right? That's why I sent it. I was confident about the buys. So that is the reason why I was looking for buys. So the market will come back and buy. It will use this liquidity because people will have their stop loss below. So the market would need to use that liquidity to move. So that was the bias. Right? That was the bias for this trade. So yeah, okay. That's bias for for the trade, right? Coming, just trying to go back a little bit. So that's bad for this trade. So you mark out your demand zone. This is your demand zone. First thing I did, mark out my demand zone. And I'm looking for buys. I'm looking for buys only, right? I'm looking for buys only. So what did I do? I have a little bit of pattern, right? Where I need the market to take out time-based liquidity. What is time-based liquidity? Time-based liquidity is previous daily high, previous daily low, previous weekly high, previous weekly low. So I want the market to take out a previous week, a previous daily low or a current daily low. What do I mean? So I go down to the 1 hour time frame. I go down to the 1 hour time frame. Let me just do this. So I go down to the 1 hour time frame, right? Now you can see coming in to the market on Tuesday, where is your previous daily low? Is it right here? So this is my previous daily low right here. Now you can see the market has pushed through, it has ran through. This is the liquidity run. The market has run through, right? And the market has formed during the Asian session, right? The market has formed this. The market has formed that, right? The market has formed that, right? So what I needed now for the London session, right, was the market to go to the liquidity zone, right? To go to that low, to go to that low, form this pattern, come back, take it, and push. So there's the pattern I'm trading, right? So I went down to the 15 minutes. Observe the way I'm doing this, right? Observe the way I'm doing this. Now you can see, sorry, 5 minutes. So on the 5 minute time frame, you can see we have that pattern, right? We swept the liquidity, we created the inducement, and now I wanted the market to come back down, take this and move. Now the market did not do that. This was the plan earlier. Right? And then you target something like this. This was the plan earlier, but the market didn't do this, right? The market did not do this. Market kept going higher. So I felt I had missed the trade. But now look at this. Now look at this. The same thing, right? The same thing occurred again. The same thing that I showed you guys on the daily time frame just occurred again, right? Just occurred again. Just the same pattern. But now the difference is that there was no liquidity here. No liquidity here. So what does market do? The market uses this low. The market uses this low as its liquidity. I hope you get that concept, as its liquidity. So I go down to the 1 minute time frame. The market always moves with liquidity, right? I go to the 1 minute time frame on here. I'll show you the entry later. So this is not my liquidity zone. The same pattern, right? The same pattern. So you can see we swept it again. We formed our inducement right here. We got our break of structure right here, right? If you draw this trend line down, you see we're now in a bullish market, right? Like the order flow is now bullish on the 1 minute time frame due to the break of structure, right? And then you use the same pattern occurs again. This is your zone right now. Where is your liquidity? This is your liquidity right here. Let me just change the colors. Let me delete it. There are too many drawings on the chart. There's many drawings on the chart, right? So this is now my liquidity. Let's see. I do not operate without liquidity, guys. I do not operate without liquidity. So this break of structure right here, this market shift right here was my clue. I have my inducements, I have my liquidity, whatever you want to call it, right? And then I need the market to just drop down into this zone, this other block zone, right? Drop into that zone. That's my P1 point of interest. And I started buying around here. I got more confidence on the buy with this pin hammer right here. I got more confidence on the buy with this pin hammer right here. This pin hammer, this hammer right here, the pin hammer, this candlestick, the pin hammer. So I got more confidence in my trade and I let the trade run. I let the trade run and I got around 100 plus pips this trade using gold. And around, I think, so let me check the stop loss around here. Yeah, around here. Stop loss just below here. Yeah, around 13 pips stop loss, and yeah, that's around 6 hours. It's a crazy trade, guys. It's a crazy trade, very good trade, very, very good trade. You can see I started from the daily time frame. I waited until the market was bullish on the daily time frame. You can see if you go into the 1 hour time frame, right? You can see that market was bullish on the 1 hour time frame, and I then just used liquidity to continue, right? So the same thing on today, same thing happened today, right? The same thing happened today. The first thing I noted was what? Where is the previous daily high? This is it right here. So this could be my draw on liquidity from getting a buy. That could be my draw on liquidity if I was getting a what? If I was getting a buy. So I went down to the 15-minute time frame. I went down to the 15-minute time frame looking for the same thing. Looking for what? The same thing. So in the 15 minutes time frame, let's start from the 15-minute time frame. I can see, let me just delete this. Right? Where is my nearest zone for possible buys? Here. You can see this clean zone, right? This clean zone, you can see that clean zone, right? And you can see liquidity resting above. You can see just from the previous day, right? And you can also see that we have current daily low. This is the current daily low. This is the daily low right here. So what do you know? What confidence? What confidence do you need to get for this trade? What confidence again you need for this trade? You just know that the market will do what? Will come here, sweep the current daily low, right? And buy. And where will be your target? Your target will be what? Previous daily high liquidity. The same thing over and over again, guys. The same thing over and over again. I do not trade without liquidity. If this zone, right, was just a normal zone and this market just went up and start coming back down, I would not buy from here. You can see this liquidity built up first here, and then we add what? Current daily low liquidity right here. So all in there was market dump into this zone, right? Drop into this zone, which it did right here, and then it started buying it up. On the news catalyst, market used the news catalyst to do what? To just continue buying. I'll show you guys my second entry. Second entry was on the 30 minutes time frame. Let me just show you. 30 minutes time frame. So on the 30 minutes time frame, I was in the buy already, right? Market already pumped up, right? Market already pumped up. So let me show you guys this call for the second entries and the first entries. So this is a call for the first entry, right? I feel that I want to buy from these areas, right? And you should start looking for sell for buys. And that was the signal group. So you can see the entry for the gold. That was the first one I showed you. The 1 minute entry, you can see the 1 minute entry pumping. You can see everything just going smoothly, right? You can see the 1 minute entry clean as fuck. So I came in for I came in today again. This is a 30 minutes chart, the same zone, right? Same zone. I showed you guys the same zone right now. There's a 30 minutes chart. Yeah, this same zone, right? The same zone. I said I want to buy from this zone, right? And you can see, where is it? That was today. Yeah, that was today. You can see the zone I was looking to buy from. So that this is the liquidity, and this liquidity right here is the current daily low liquidity. So I wanted the market to come drive into this pull off, what was it called? This point of interest, right? This demand zone, and buy straight towards the previous daily high liquidity. You can see everything is well marked, right? The same logic I apply to my trade, the same logic I apply to my trade. I do not work without liquidity, right? I do not work without liquidity. And you can see buy style moving. So that was the way you did. You can see the buy style moving. Gold, you can see clean buys, guys. Clean buys. Clean buys. And I want, when the market was here, right, I got a second entry from the mentorship group. The mentorship group gave me a second entry. You can see this is the mentorship group. I spotted this, they spotted this fair value gap. And I'll show you guys how I trade the fair value gap. I do not just trade the fair value gap blindly. I'll show you guys in a minute. Let's zoom in. So on the 30 minutes time frame, this fair value gap was spotted. I think, was it 30 minutes or 15 minutes? Let me check again. It should be a 15 minutes time frame. So let's look at 15 minutes time frame. I'll show you guys what I use, right? Always use liquidity. Always use liquidity, guys. Always use liquidity. So on the 15 minutes time frame, you can see the fair value gap clearly, right? Is the fair value gap clearly? That is your fair value gap, right? So let me just delete that. So you didn't know where the zone is. What I used was liquidity, right? So I went down to the 5-minute time frame. The 5 minutes time frame, yeah, 5-minute time frame basically. So I was waiting, I was watching, right? I was watching. Where is your zone? This is your zone. This is your demand zone, right? That is the demand zone I want to work from. But I do not want to buy it straight up, right? I don't want to buy straight up, right? I want to get a good feel. So this is the first liquidity zone, right? Just above the demand level. This is the first liquidity zone I want to work from. And I need the market to take it out. I need that sweep. You see, I need that sweep. So on the went down to the 1 minute time frame. Went down to the 1 minute time frame, and you can see we are, this is basically what you can even refine that zone right here. Well, let's not do that, because the market always use liquidity. It always works with liquidity, right? So, anyways, market pumped up. We're in the favorable gap zone right now. Dumps, right? This is the first liquidity. Takes the first liquidity, right? Takes the first liquidity. Break structure, right? Now, I think there was a news or something around 2:30. Yeah, this is the news. Yeah, no, 1:30 was the news. Okay, that was what pumped the first push. So, anyways, took out this liquidity, right? Took out this liquidity, right? Now, dumped. Now, if you what's it called? If you what is it called this thing? Refine this zone, right? This would be the zone you're working from, right? You need the market to tap into that, right? You need the market to tap into that, because we've gotten a break of structure right here. We've gotten a break of structure right here. So this is now the low of the New York session. Now, for me, right, I like to start my New York session from 1 o'clock, which is not 1 o'clock. It's not 1 o'clock. It's 2 o'clock. So just for 2 o'clock right here. This is 2 o'clock. Boom. This is 2 o'clock, right? So that is 2 o'clock, that's 2 p.m. Nigerian time, and that's when the New York session starts. So this now automatically becomes the low of the session, all because I was observing what I'm doing. I like to have this first hour, right? This first hour just shows me some manipulation that's going on, stuff like that, right? But now I like to it's the same thing, like low of the day, low of the session, low of the week, low, you understand? Just keep refining it. That's all I did right here. That is all I did right here. You understand? Now the market came down, higher high, right? Broke structure, takes out liquidity, this liquidity right here, this liquidity right here, and I started buying from here. I started buying from here with the knowledge that the market has tapped into this zone already, this bigger zone. I was not using the 1 minute zone. I was using this zone right here. Right, the market has tapped into that zone. I started buying from that zone. My stop loss was below here. My stop loss was below here, right? Knowing that okay, if the market goes below this, let's check it. I think it was the 15 minutes time frame or the 5 minutes. I'm not sure again. Let me try and check it out. I think it was the 15 minutes or the 5 minute time frame. Yeah, 5 minute time frame. 5 minute time frame. Let me just, yeah, 5 minute time frame. So if the market goes below this zone, right, I'm wrong, right? I'm wrong because yeah. So takes out the low of the session and I started buying. It came down again, right? And then it started pumping. You understand? You can see my entries on here. Let me check the group. I see my entries on there. Where is it? Second entry. So you can see my, yeah, exactly. You can see where I started buying. I started buying, I don't know if you can zoom. I started buying once the market broke the low of the session, right? The low of the current session. And you can see it has taken out that's made higher highs. That higher highs was key for me, right? It is key for me. So I made out that higher high, takes out the low of the session. You know where we're going to. You can see where my stop loss is. You can see where the stop loss is just below that zone. Understand? Just below that zone, and that was the clear entry. I don't just trade fair value gap like blindly. Yeah, I don't do that. I don't do that. You know, I don't do that. I need liquidity to move into that zone. Now the fair value gap acts as what? My point of interest accompanied with the what? With the demand zone right here. And now I need market to engineer liquidity. This thing the market was doing right here, this thing the market was doing right here, right? This thing the market was doing right here. It is called engineering of liquidity. It is creating liquidity so that it can move. So that it can what? It can move. You get, so that is what the market was doing right here. This is the 5 minute time frame. I hope you guys have learned something from this video. That's how I got the second entry, and boom. Always work with liquidity, guys. Just have patience. If the market has not created liquidity, then it's probably not the right time to buy, the right time to sell. You feel me? So I hope you guys learned one or two things from this market. Always have what? Liquidity and close to your point of interest. Let that liquidity be taken out. Let there be presence of what? Change in market structure, buys or sell, and then you can buy, and then or you can sell. You understand? So peace. Yeah. So I have another trade that is running right now. I don't know if this trade would work. This is the 15 minute time frame, I think. So this is the 15 minute time frame. So, anyways, let me just clear all of this. Clear this, clear this, clear this, clear this. All right. So you can see the market took out basically the low of the day, the current day, right? Swept the current day, right? Formed this inducement that is present right here. So I don't know if it's old. So I'm just waiting to get confirmation on the lower time frame, right? Formed this inducement, has formed this point of interest, this area right here is my new demand, right? Now we're looking to buy, right? So this I'm already in the trade right now. As I was explaining the trade, I was explaining the trade I was entering the market. My stop loss will be below here. It's around 40 pip stop, right? So let's see what will happen. So my entry, my stop loss, my take profit rather will be here. Yes, here. So this is my trade for gold. Trade for gold. Yeah. So, anyways, I hope you guys have learned something from this. This signal, if you trade this signal with me, if you use like small risk, do not risk any. This is not financial advice here. Anything can happen. But this is why I trade. I always use liquidity, point of interest, point of interest, change the market structure. Everything works hand in hand. Please, guys, please like, subscribe, fund knowledge from this video, from this content. Please like, subscribe, share with your training buddies. Yeah. See you later.